Yeah, we will have a mild recession. That was always my base case.
Crypto family, welcome back to the channel. We're going to be checking out Raoul in today's video. You saw that he said that we're going to have a mild recession, but he says that's already priced in for crypto. He's going to be talking about where he sees crypto, Bitcoin going at the end of this year, going into 2024. So basically just his updated predictions for the entire crypto market. So this is a recent interview that Raoul did. Wanted to share it with you guys. And let me know what you guys think about everything that Raoul said in today's video. Leave it in the comment section below. Let's go ahead and play the clip here.
We will have a mild recession. That was always my base case.
Okay.
But everyone was apocalyptical. It was
Yes.
2008 again.
Yes.
Everything's going down 50%, 60%. Obviously, crypto goes down a lot more.
Sure,
It
sure.
goes down 80%. But generally speaking, I just wasn't that bearish.
Yes.
And the market had priced it in last year.
Yes.
Which was the big thing to me. It's like, you know, when ETH bottomed in June, Bitcoin, the rest of the space bottomed in October, that was like, it's all priced in. So it doesn't matter. Everyone's like, I want my recession, I want my 50% sell-off in the S&P. You're not going to get it. You had the mild recession sell-off last year. That's what we're going to get. But it's actually driven by the MBER, and they've got a whole bunch of different parts of what drives a recession. But basically, if we see unemployment pick up from here, we're likely to have called all of the factors that the MBER have for recession. So we're very, very close. All of the indicators that I use suggest we're pretty much in negative growth now. I said, how many of you have laid off staff, been in an industry where staff have been laid off? How many of you are seeing growth? I mean, it's like, it's obvious. I mean, it's obvious we're in a recession. I don't know anybody's not laid off staff unless you're in healthcare or something like that. A lot of the millennial generation graduated around the financial crisis. Those were two big recessions. And then the pandemic.
Right.
So you've had three of them on trot, which were abnormal.
Right.
I actually graduated in 1990, and we had a recession then. The S&P was down 30%, 28%. It was very much like this one. I think the NASDAQ finishes this year at all-time highs. I think the S&P goes to all-time highs. So Q4 for me, the weaker period, that's when the recession comes in. So that's when we've already heard today, really, all the Fed were out saying, we've done enough. Bond market's gone too far. The bond market's overpricing this. Things like Janet Yellen saying today, really interesting comment. She said, well, when we think about it, financing the debt is going to be about 1% of GDP for the next 10 years. Well, if the government's 100% of GDP in debt, she's basically saying interest rates have to be 1%, which is part of this everything code thesis I've had. So what I'm seeing is liquidity starting to pick up. I think they will stop quantitative tightening this year. And then with it's a bit complicated here, but the Treasury have been issuing new stuff. So that's the TGA bill, but that probably slows down. But the reverse repo, which is the other part of the liquidity stuff, start draining. And that probably pushes liquidity. If they take QT out, it just means liquidity rises. So generally speaking, crypto is the multiplier. So if I look at the NASDAQ's up 38%, Bitcoin's up 70. So if the NASDAQ finishes the year up 48% or something like that, which would be a hell of a year for the NASDAQ, well, Bitcoin should finish up 100% plus. Right. This is macro spring and crypto spring. The cycles are actually the same thing. The Bitcoin halving actually just relates to the macro cycle.
Let's talk about that.
Which is all interest rates in 2009 got reset to zero everywhere. It was a debt jubilee. It was a great reset. Nobody understands this because everyone wants their debt jubilee was to forgive all debt. They didn't. They forgave all interest payments. So what happened is every government on earth reset their debts between 3 and 5 years. So we've got this 4-year cycle, which is the Bitcoin halving cycle, which is the economic cycle. They're all the same thing. So now we're in the phase where we need to pay the interest on the debts from the pandemic.
Okay.
In 2024, 2025. Those went exponential. And the only way of doing it has been put it on the balance sheet of Federal Reserve. So I went back and I think I was the first person or the only person to show that all balance sheet growth of the Federal Reserve was just the payments of the debts, the interest. So nobody's paying interest. Even though interest rates went up, they don't pay them. They pay them for this period. When it comes to actually pay the interest, they stuff it on the central bank balance sheet. So nobody can afford to, because the government is 100% of GDP in debt, just over that. And if interest rates are at 5% and economic growth's at 2%, well, there's 3% difference, because GDP growth is all of the income for the economy. Well, if that's not enough to pay the interest alone on the government debt, how the hell are you going to pay the private debts, which are 120% of GDP? These are the maths that form part of that everything code thesis. It's like there is no way they can have interest payments here, because what's going on today is they have to keep issuing more bonds and more bonds from the previous ones. So they can't do it. So the conclusion of that is there is only one outcome to everything, which is more cowbell. So they either, and so they either stop yields rising, like in Japan, it's called yield curve control.
Okay.
And what that is we will pay this price, let's say 5% on bonds, regardless of how many you sell us. And to do that, they print money. Or
it's either more liquidity.
Or I think they're trying to overshoot with inflation on the downside, bit of unemployment rising, so then they have the cover to cut interest rates.
Okay.
And stimulate. Election year, always stimulus. So all roads lead to more cowbell. It's the point being is you debase the currency, all assets rise, because you're optically debasing, which is why the Argentinian stock market goes up in a straight line until you put it in dollar terms, and it's actually gone down 90%. That's debasement of currency.
Right.
Venezuelan stock market's the same. Right. All of these, Iranian stock market, they're all the same thing. Why crypto outperforms is really simple. It's got a faster adoption curve. It's a technological adoption story. Everything else is noise. It's technology plus debasement. NASDAQ is the second best performing asset. Why? Technology plus debasement. The S&P basically just about offsets debasement plus dividends. Real estate doesn't offset it. Gold doesn't offset it. So what I started doing was dividing all assets by the Federal Reserve balance sheet as a rough way of looking at it. And you get a really different picture. The S&P has gone sideways forever, which is why people who invest in their 401k in the S&P passive index, they never get ahead. So because property goes up and gold goes up and all of the assets go up the same amount. So you're just not making gains. NASDAQ and crypto have been the only two assets that do it. Opportunity to own a broadband network. Or he'd been given opportunity to own the infrastructure rails for the web. He'd have thought about it in different terms. This is what this is. It's like we've never been given the opportunity to own the infrastructure layer and own it before the institutions. I always talk about this. We're front running the institutions. And it's not like it's some mass illusion or delusion. I know it because I speak to them all day. They're all coming. All the investors are coming. And we get the privilege for the first time in our lives to own this, because everything else is VC. Early stages VC. To invest in VC, you need to be an accredited investor. Not only that, but most VC funds won't take you unless you've got a certain amount of capital. So it just knocks everybody out of the actual largest part of the economic pie that gets made. And then eventually something goes public and only a few of those companies make a lot of money. So we're so disadvantaged as ordinary people. We're first.
And thank you for watching all the way to the end of the video. Hope you guys enjoyed that one. If you found any value, make sure to hit that like button. Let me know what you guys thought about this one in the comment section below. My name's Aaron from the Bitcoin Bros. I'm out. I'll see you in the next one, and have a great rest of your day.